Hello, welcome to this new video. This topic is about the topic that I have also confused over the past few years in my life, and I'm still in between where I'm still doing both, but the mutual fund and individual stock investing has their own set of advantages and limitations as well. So in this video I'm going to explain what are the key advantages and disadvantages of mutual funds and direct stock investing, and how you can choose depending on your priority, which in which particular segment you want to go with or invest your money in. So what I'll do is I will explain this topic in the four parts. So first one will be I will be list down you all the benefits you get when you choose a mutual fund. What are the benefits of mutual fund? Then I will explain what are the benefits of direct stock investing. Then we will go to what are the limitations of the mutual fund and what are the limitations of the direct stock investing. So let's start with the mutual fund. So first benefit of mutual fund is that mutual fund managers are the professionals who have a lot of experience over the years managing your mutual funds. They have managed a lot of asset management, a lot of asset management experience in their life. In fact, you have to make sure that if you are investing in any particular mutual fund, make sure that you must do inquiry about who is your fund manager is. Check their credibility, how much time they have spent in the market. At least they have seen two big cycles in the market where they have learned, if a fund manager is new, then he don't have enough experience to handle that much amount of corpus, because asset management company has crores, thousands and crores of portfolio. So it's very difficult for them without any experience to manage a good. It's not the case that it should be necessary. A younger person can manage a good portfolio as well, but you have to trust with your money to them. So make sure that you are depending on relying on trustworthy guy who knows and who have better experience. So like I said, the first benefit is it's managed by a professional fund managers who have a lot of experience than you personally might have in the market. So it's benefit that they get to choose, they get to decide, and they get to use their knowledge and implement it in the market. Second benefit you get is you get diversification, because your money, whatever your investment value might be, it get divided into a lot of companies and a lot of sectors at the same time. So you get a good diversification of your money, where a few sectors might go down at a particular time, but the others that have a positive run, that maintain a balance between your NAV and your portfolio value. So that helps in risk mitigation and hedging your portfolio. So diversification is a good factor there. Third thing is good about mutual fund is liquidity. You can withdraw it and it will reflect your account very in few days. So it has a good liquidity as well, and very low fluctuation as compared to the direct stock investing. So they are less volatile because they are invested in lot of sectors and lot of stocks, so it gives a less volatility. So these are the key benefits of mutual fund. Now we get to the direct stock investing and what are the benefits of direct stock investing. So first and important benefit for direct stock investing is you have control over whatever stocks you are investing in, and you don't, in mutual, like in mutual fund, you don't have any control over that. So your fund manager choose which stocks they want to buy, but here you have all the control and you can choose which stock to buy, which stock to sell, and how much you want to hold it. So there is another interesting point to it, but I will share it at the later in the video. So this is the first key benefit that you get when you choose direct stock investing. Second point is direct stock investing has a potential of higher returns because you are investing and picking individual stocks. It is not diversified in different stocks, so you are spending or investing money in a single stock. I mean, of course you will invest in a lot of stocks, but when you pick a particular stock and you research about this thing, the company and future plans of the company, how the trajectory look like, the growth trajectory look like of the company, how is the management, you study everything, and when you put your money into the stock, it has a high chance of giving a good returns as compared to mutual fund, because you might have invested money in that same company, but the portion of your investment will be very small and will not grow a significant improvement in your portfolio. But in the stock investing, direct stock investing, it will reflect on your portfolio very clearly. So that gives you a good edge there and chances of getting good returns. Third thing is you don't have to pay any fees for in mutual fund you have to pay expense ratio, and if you are in regular mutual fund then you will have to pay commissions and everything. But when you go to the direct stock investing, you don't have to pay much. There might be a very minor brokerage charges that you have to pay for transactional charges, so that is very less as compared to mutual fund. So that's a good thing in mutual fund, stock investing. Fourth point that I personally believe, as I have seen the overall movement in the market, that for mutual fund it is very difficult for them to switch or reshuffle their portfolio because it's in a large quantity and large size. It is very difficult to liquidate, or it is very difficult to sell their stocks suddenly and to buy new ones. But because these are the large, thousands of crores of portfolio, so it is very difficult for them to do, because it moves market a lot whenever they are buying or selling the stocks. But as a retail investor, our portfolio sizes is very small and we have very good flexibility that we can take decisions on when we want to sell a stock or when we want to purchase a stock. It does not move market much because we have a very small volume and small amount of shares, so it doesn't make any difficult there in terms of buying or selling shares. So I talked about the benefits of mutual fund and direct stocks. Now we will move towards the limitations of mutual fund and then limitations of stock market. So as I said, the first limitation of mutual fund is you have to pay fees for expense ratio of that particular mutual fund that you are selecting. And you might think that it's a small amount, but when you compound over the years, let's say you are spending expense ratio of 1%, and when you go for let's say your portfolio size is very big, then it eats up a large chunk of your profits out of your portfolio. so it becomes a very huge thing. But of course, when you compare these things with the time, your time investment in the market, you feel that I can give away this much amount because a fund manager is working on this part on my investments. So if you are able to let go of that commission or that expense ratio, then it's good thing for you as well. But technically speaking, it's a limitation for that. And second option, I mean second thing, second point is, second limitation is, as I said, that in stocks you get a freedom to buy and sell stocks, but in mutual fund you don't have that advantage where you get to pick which stocks has to be in your portfolio. So all these things that decided by the fund manager, and he is the whole responsible for this thing. So you don't get to choose all these things in the mutual fund. Third is because, as I said, it has invested in a lot of sectors and lot of companies. The profit or the returns you get are very lower as compared to the stock market, because half of the stocks goes down and half of the stocks improves, shows a significant growth. It shows the average of the all these things, right? So that makes it a very low average or low return asset. But same thing will help when market in a bad condition. uh, you know it it makes the portfolio stable as well. So it's a drawback for mutual fund because of that. uh, Now we will move on to direct stocks disadvantages. And the first thing is, risk is very higher, because you didn't have a diversification advantage here. So you have to pay, or you have to be in a position where you have to face a lot of risk on whatever you have invested, and the movement or volatility of this stock are very high as compared to the mutual fund. So you have to be very patient in terms of that. So that is a very a limitation, you can say. Second thing, the most important thing is, because it is managed by you, there is no fund manager. You have to make sure that you are spending time on researching about the stocks, researching about the management, researching about the news, whatever getting. You have to very aware about the geopolitical things, what is happening, if there is a war situation, if what are the relationship between India and US, India and China, or inter-country relationships. So you have to make sure and keep an eye out on all these things. Of course, for longer term it doesn't matter much, but you have to make sure that you are focused, or you are aware about the company policies, that you have owned the stocks, company fundamentals, how management is working, if there are any changes in the management. So you should be aware about that. So that is one limitation that it has. And the third and most important thing here is, it's an emotional thing, because whenever you have control over all the stocks, you tend to realize, or you feel that you get, or you make impulsive decisions of selling or buying some stocks at the wrong level, wrong valuation, and at the wrong time. So these things might happen, and to master it you have to spend a lot of time in the market to become better at it. But no matter how seasoned investor, or a smart person he is, there are very likely chances that you think about this, and you might take an impulsive decisions to do some changes in your portfolio. So that you have to make sure that you are controlling that, and you have control over all these emotions of yours that are being that were being in the market. So these are the points that I have mentioned, have to mention, to categorize and to take decision which one you should choose. For beginners, definitely I would say that one should start with mutual fund, but I would definitely recommend everyone that with small amount start investing in the direct stocks as well, because they are very rewarding, and it helps you learn about the market, it helps you learn about the industry, and it opens up your mind how how other factors affect the market and all these things. So I won't say that go lose everything. You have to focus on your active income first, and whatever time you get in the free time, you should focus on this, learn about these things. So your priority should be like this. uh, this is these are the point I wanted to mention, and I have personally have both the things running for me, mutual fund as well as direct stock investing. uh, I would say direct stock investing are very difficult to emotionally hold yourself, and it is very difficult to keep yourself controlled in yourself, because like I said, it's emotion driven, and you don't see lot of movement sometime that you have purchased a stock and it hasn't shown a movement and it's in a negative condition, but you know that company is doing very well and it's going to do well and show results in a very good way. But still, all these factors considered, you still have that emotional thing that I should sell this stock and invest in somewhere else. So these kind of things, because I have started investing in the stocks, I get to practice how to self control your mind and how to self manage this situation. So I think this is what I am learning so far, and this is what is, once you learn about this, it will help you in the longer run. So I am glad that I decided to start direct investing and learn about direct stocks, where I learn about how economics work of this company, and get idea how these companies do their marketings, how management works, uh, how much percentage of income comes from which stream, and all these things. So out and out, I think it's a good decision that you should have combination of both. And once you get good with direct stock investing, I think you can reduce your contribution in the mutual fund if you have a good amount of time to research and this thing. But you want to focus on your active income and you are good at it. If you are getting a good active income, then you should definitely focus on that, because investing has to be part of this thing. But your capital makes much more difference than whatever time you are going to put in selecting those stocks, because if you don't have a good active income and would have large capital to invest, it doesn't matter if you make a lot of returns than mutual fund. So take your decision accordingly, and this is how I think about it. So I also don't spend a lot of time in the researching stocks, but there are several key points that I look for while selecting a stock. So yeah, this is what my experience have been, and that is why I wanted to share this thing with all of you. Though there are a lot of information available in the market, but simple decision making, it has to be from your basics, right? You don't have to go into detail. These are the basics that you have to stick to before going into and spending a lot of time into wondering about that I will get rich quickly. So it doesn't happen that way. You have to have good capital, and you have to focus on priority wise, what you have to execute first, then what second, and what third. So investing comes very later. Just make sure that you are working on your active income as well. So that's it, I wanted to share. Please do share in the comments if you like this video, or what part did you think you don't relate to, or if you have anything to add to this, please definitely share as well. This is my experience so far, what I have understand it, and you might have a different thought as well. If you want to improve, you give any suggestions to me that what I should improve, then please do in the comment, and I hope you might have got some value out of it. If you like this video, then please like this video, and thank you for watching. I'll see you soon. Bye.